on the topic of how can private capital industry meet the challenges of Corona, digitalization and sustainability. With me in studio is Valerie Brunner, Managing Director, Group Head of Institutional Clients at Raiffeisen Bank International. Valerie, hello.
Hello.
And digitally with us, Wiebke Schlömer, Director for Europe and Central Asia, International Finance Corporation. Hello, Wiebke.
Hello, good to see you. Sorry, I'm not with you in person.
Not in person, but we can hear you and see you very well. So thank you for
That's
taking
good.
time for being digitally, so to say, with us and discussing your key topics for today. I would like to start, as this is the closing panel for today, with your takeaways, Valerie. You were on one of the panels and you were chit-chatting, so to say, around the conference. What are your key takeaways from today's conference?
Well, the panel that I was taking part of was actually really interesting because it was circling around what do LPs for private equity funds perceive as the main challenges, hurdles, what trends do they see? And actually it was not a very diversified opinion because everybody shared the same views that there is really a huge need in education, both of investors as well as of entrepreneurs or corporates, to lean into the private equity world for the upcoming months and years. That there is a huge demand from investors to find good vehicles, good funds to invest in. And for us, as an investor, there is really a high demand for a very professional fund management to help us invest into good assets.
Okay, I will be asking you also about the current challenges of the industry in general. So I think you mentioned one of those. Wiebke, before we start into this topic, maybe from your side, just a brief pitch. What do you guys do? It's a very interesting role that you have, but for the audience that maybe don't know you, what is IFC?
No, thank you. And actually, I'm really delighted to join. A few words. IFC is a multilateral institution, part of the World Bank Group. And we are one of the leading investors in the private sector in emerging markets. And we do really the whole range of financing instruments. We do senior debt, mezzanine, equity. And equity, we actually do both direct equity investments as well as fund investments. And I think for this audience, what might be interesting just to quantify a bit, to give you some sense, globally across emerging markets, we are currently invested in around 350 funds with over $7 billion in committed capital. And in the region that I lead, and I think where we have quite some overlap also with the audience from and the participants, what I've gathered this day, is so that's Eastern Europe, CEE, Turkey, CIS. We're actually invested in around 30 funds with close to $700 million invested, so quite substantial.
Do you see any?
And perhaps let me actually say one more word, the link to Austria, because I'm really delighted. We have our regional office for that region that I lead here in Vienna, with around 120 professionals, so actually quite a sizable presence. And while we don't directly invest in Austria, we do work, among others, with Austrian companies in the region when they expand, and with Austrian business partners, including, of course, with Valerie and her team. So I'm really delighted to be here, and I want to congratulate you. Great event that you're hosting.
And do you think that while mastering the challenges of Corona, digitalization, sustainability, we will see a boost in private equity financing of growth, of innovation, digitalization? Do you feel that maybe in your organization as well?
Look, perhaps a few thoughts, and then I'm curious what Valerie thinks. I think in this field we all need to be optimists, so I want to see a boost. What I do see is quite clearly a big need for equity financing. And I think in this huge crisis we're all going through, and I think everyone rightly so has touched upon, I think we've seen that the immediate crisis response was a lot of liquidity instruments, mostly debt financing. But you know, it takes basic, let's say, finance knowledge to know the more that you take at some point soon, you need more equity. And especially at a time when companies may suffer and profits suffer. So here I would say there is really a lot of effort needed. And that's why I think the event today is very timely to see how can more private capital be mobilized. And likewise, I see for, let's say, government, public sector, also multilateral institutions like ours, a need to support not only the debt, but also the equity financing space.
Well, I think, Valerie, you guys have an answer. We reported this week about your new Austrian growth capital fund, 200 million for SMEs and scale-ups. Is that exactly the answer that you provide?
That could be one of the answers, yeah, exactly. And I wish Wiebke could extend her 7.5 billion by only a little few millions and also support the Austrian equity market. But I guess Austria does not yet fulfill the ratios of support need that IFC normally has in order to get invested. But basically, yes, I think our initiative, the main idea is to be to render one little mosaic piece of what Wiebke has just mentioned before. We think in Austria, at least, there will be, as a result of the last half year, I would say, there will be a huge equity gap in the SME, maybe small to medium, and a few large companies. And this equity gap might rise up to 5-6 billion euros. So banks will normally not be able to bridge this entire gap with debt financing, because regulators do not want us to finance to increase the leverage to an unsustainable level.
You're simply not allowed to do it.
We are simply not allowed to do it, even if we would earn well, but it would not be meaningful, and it would also not help really the growth of the company, I guess. And as everybody is really foreseeing a huge rebound of the economy in the years to come, we are convinced that a lot of growth capital will be needed. So our action, that our growth fund that we just launched now, jointly with C Quadrat, can be one of the pillars of such a equity support for the growth phase that we are going to see, I think. But the need is so large, I would say, that manifold initiatives will be needed in order to really kind of turn the tide in Austria and really achieve a substantial growth in equity, what we think will be needed. Yeah.
Those are so important 2 points from both of you, that we will actually inevitably need equity capital in order to be able to also provide more debt capital, debt financing, and also to pay it back. Do you see, so to say, also the opportunity to activate private investors to invest in such funds, SME funds? Are you raising capital from your own, so to say, funds, or are you open for private investments?
Both. So we as RBI, in that context, we are one or the anchor investor, actually, for this Austrian growth fund. But the fund is deliberately chosen in a setup that we can and must and will attract external funds. Yeah? So this is why we have chosen a setup not as a captive fund, where we or a daughter company of ours would play the fund manager role. Because that would inevitably bring us into a difficult, maybe here or there, conflict of interest situation. We have chosen a setup where we are partnering up with a professional external fund manager, C Quadrat, in that respect. And as such, we think this is a setup where also external private capital will be raised and will be drawn into this event, because there are certain criteria really important for external money to be paid into such fund, and a clear governance, a clear focus on what the investments should be directed in, but a clear governance between LPs and GP is of utmost importance, and that's how we are structuring it. Yeah.
Wiebke, we were talking to Georg Kopetz earlier today about financing scale-ups and the role of private capital in financing scale-ups. There are many new markets opening after Corona. So do you think that also in terms of, let's say, global competition, it is inevitable to increase the focus on private financing and private equity financing, also in order to be competitive with the global scale-ups that, for example, America, China, and other countries are producing?
So just that the question is whether I think that there is more scale up. I'm not sure I fully understood.
The post-corona time is offering a lot of opportunities for many companies, startups, scale-up,
Yes.
fast-growing companies.
Yes.
And would that mean that especially now, more than ever, we need private equity capital to finance these scale-ups in order to, so to say, gain the market shares on a global scale when competing with China, when competing with US and other countries?
Look, I love it. You're ambitious. Let's go and exactly compete with the giants, China and the US. But more seriously, very much so. And I mean the challenge of scaling, of course, is always one. But at the same time, I think this is also the time when there is actually more scope for well, no, let me stop there. Because I think what this crisis has really done, it has shown so many disruptions everywhere, including disruptions in supply chains, in so many industries and so many business models, that I think this is, then in turn, exactly like you say, this is also what offers opportunities. And where I'm happy to see, especially in the tech space, in the innovation space, and thereby the VC industry, that immediately sort of there is a mindset of where is the opportunity. And so for this, I think even more than the, let's say, later stage private equity, I think where really innovation capital and real risk venture capital is needed to support these opportunities. But the one thing that I'm actually following and observing with great interest is exactly what I think you're pointing to. Where do opportunities arise, both on a geographical basis, on a sector basis, from these very massive disruptions that the corona crisis has brought?
Great. Valerie was smiling and laughing. I think she liked your answer. You want to comment it?
No, I can only reconfirm, of course, what Wiebke said. We think there are, especially as a result of the crisis, there will be a consolidation in many industries, and that will prove to be a good opportunity for companies to grow. And how can someone fund growth sustainably? By attracting capital.
Yes.
So therefore, be it investments in growth, be it investments in ESG topics, be it investments in digitalization, this all will need to be funded somehow, not purely by leveraging. And therefore, I think, yes, a lot of opportunities will arise. Again, I think it's great that the IFC is engaging so much also, not only on the debt side, but also on the equity side. I wish it would happen in Austria. We still have to work on this. But chances are, I guess I mean, it's lying here in front of our feet, the need.
The need is there, and yes, Wiebke.
Oh, sorry, Dejan, I was wondering if it's not as easy as if I was with you. If you allow me a thought on this, and that's I think we have a big focus in a lot of the discussions today on, of course, how can we ensure there is enough financing and is enough equity available, and of course that's key. But the other sort of side of, let's say, that pie that I see is you also really need to ensure that there are really enough companies that also take on the private equity industry. And I mean, here what we often see, and Valerie, I think with your fund, and I was really pleased to see that it's very much focused, I think, also on SMEs, which are so key, the backbone of any economy, the Austrian economy, key for employment generation or maintaining. But often also these can be family-owned companies that may not be that open to having, an external private PE type investor come in. So this is something I think that also where education may be needed, or a lot of good examples to ensure that if on the one hand there is a lot of effort of making the capital available, that then it can also really be put to use productively.
Yeah, I mean, you're mentioning something really important. I think there is this educational part, but actually it's not so much about education maybe, but about building of trust in the Austrian corporates as well. That initiatives like ours, but manifold others there are really in Austria that are already out or will come out soon. I think it's we can really build and start building, creating some trust in the Austrian corporates that we are not huge PE funds who come in and come and go out at the best possible early exit, but are there for a sustainable accompanying of the corporates and of their growth. And if we can kind of build this level of trust, of course, we in RBI and as Raiffeisen, we will use this connection and trusted relationships that we have, and many other banking groups also have, to kind of take away this fear. What will happen if I let somebody take a little minority share in my company? That this will be actually very beneficial to the corporate. In other countries, this is already very much mainstream and very much used. But I think it will be a lot of work to do, but achievable, to make it a trusted instrument and a partner for growth.
To change the ownership strategies also in family-owned SMEs, as Wiebke said, which would be very, very crucial. And maybe the post-COVID time is a good opportunity for that as well. We have some questions, Valerie, to you. I heard on another panel from a new vehicle of RBI, Continuum. Is Austrian Growth Fund a competitor to this or a partner, or are these vehicles totally different things?
They are not totally different things, but they have a very different focus. So the focus of Raiffeisen Continuum is clearly on succession, on the accompanying, on the enabling of succession solutions for companies. So basically the idea of the Continuum Fund is you have a very well established company and there is a known successor in the company, but the change of ownership needs some financial support. Mm-hmm. It might be a very senior employee, a very senior manager who would be the logical successor of the existing owner. And Continuum is engaging in providing this support during the takeover phase, and is facilitating this, whereas our growth fund is providing capital for growth. Mm-hmm. We are not focusing on the change of ownership situation. That's not what our growth fund is doing. We are facilitating transformation in digitalization, in growth area, in the rebound of the economy, basically.
Wiebke, do you think we see some new models coming as well in financing growth, some revenue share models as well? Do you see them as new competitors to private equity financing, to equity capital on the market, or are they a synergetical, so to say, add-on?
I will say I have not seen them that much, but I would say given the challenges we have ahead of us to tackle, I actually think it will steer, or like you say, you're referring to a few, it'll steer some probably innovative models, some that may help, let's say, have a somewhat different risk reward balance. I think that's in my view, key around any of these models to look at, let's say, who has what risk, who has what, who carries what risk, who carries what sort of scope for upside, so that I think that remains aligned. Because ultimately, I think, and the link here for me is with what Valerie also said, is for these partnerships to really work, it's about building trust and about having sort of broader, having aligned interests. And I think whatever type of, let's say, revenue, be it revenue share or be it a typical PE type structure, you have, key is that you have aligned interests. And I think both from the substance and also from a time horizon.
Great. Another question, Valerie, for you, a quick one. What is the basics of financing for the RBI fund, equity or mezzanine? What are the investment criteria? What ticket size? Just some key facts around it. Your microphone.
Thank you. So basically, the key investment criteria are we are investing in sustainable business models with a preference for ESG relevant topics. Certainly, we would not invest into restructuring situations. We would not invest into real estate. But that is as much, I would say, as lining out what we do not do. What we want to do is really having a clear focus on Austria or on companies that have a value chain that somewhere begins or ends in Austria. Ticket sizes, I would say, from the target company perspective, would be between 2 and 20 million. That's what we said. The range is wide, but we have to see what, where the need will be coming from. You were referring, or one of the question was focus on equity or mezzanine. Clearly, the focus in this round now will be on equity. But mezzanine can be a partner alongside some equity investments if the combination might make sense.
What about, Wiebke, the pre-IPO market? Do you have any status on that? And do you think it will be boosted as we speak also in the post-corona time?
I will say, I think this will very much depend on the type of recovery we are seeing. If actually, had you asked me sort of 6 weeks ago over the summer, I think I was still more expecting sort of more a V-type restructure, V-shape recovery. I think now, not least how numbers are going up, restrictive measures kicking in again everywhere. And I think generally all the effects of the crisis, I think we're just starting to see them. So I'm saying this to say we'll see what impact this will anyway have on IPOs, and if we think IPOs, that's the step, and then you have a much clearer case for pre-IPOs. I think the jury is still out, to be honest. I think key is now to really maintain and rather support companies and help with adjustments on business models as needed. And of course, actually, the one thing I kept thinking about the whole day and where I felt, allow me that thought, where I felt there was, for understandable reasons, I think not as much discussion around where actually exits. Because I think this is, of course, a time it's very hard to exit. So I think whenever we think about also, boosting boosting more equity financing, and be it how to support pre-IPO rounds, it does mean we need to have a clear path to exit. IPO often is the ideal route, doesn't always happen. So where do we stand with also the capital market development front, helping support exits? I'm only highlighting it to make sure the different pieces that sort of belong to the PE discussion are captured.
Where do you, in general, we have 4 minutes left, in general, still see the challenges for the private capital industry, so to say? What still needs to be done? There's a lot of, it seems to be, for me, a clear view on where we are headed and what is necessary, but where are the challenges?
Well, for us, or from our perspective as a bank, one of the challenges is that still the regulatory treatment of banks' investment into private equity is rather, I would say, unfavorable.
Okay.
The Austrian government is well aware of this, and I think is already here or there looking for solutions to support banks in being kind of so at least not being punished for entering into such investments on the regulatory capital side. If that is achieved, then I think one of the hurdles might really be removed, because I think if banks start to invest substantial amounts into such private equity ventures, then also additional equity will come.
Will follow, so to say.
Will follow, exactly. So
And
I
you
think
would be willing to invest?
we are.
Giving-
We already prove. We proved we are willing to invest with an amount that is for us relevant and significant. I would say higher amounts would only be achievable, and also this one is still kind of under the assumption that that the measures of the Austrian government that have really also a clear view in supporting the economic uplift again next year, that they will really follow what they have mentioned so far, also publicly. So I think one hurdle is really let banks kind of invest on a level playing field with other potential institutional investors, and this is so that would be one thing. Another, I think, another hurdle that we haven't achieved yet is a more favorable legislative environment for building or for setting up such private equity funds. Yeah? So there is something in Austria which is called Wagniskapitalgesetz, and this is currently under review. That's what we think, and that's what we very much hope for, because currently one is kind of very much tempted to go into Luxembourg or Belgian structures or German structures, because the framework that we have here is really very rigid, I would say.
Luxembourg has 260 venture capital funds registered, I think, there.
No coincidence, I would say.
Would that create a completely new market in Austria for us on the capital market side?
I think it will be very supportive in creating more traffic here, also from foreign investors, because it will allow for those fund investments to be put in a deposit account. Let's call it like this. Yeah. So you could really register and deposit this in your bank securities account, which currently in Austria is not foreseen. Also, you could make it easier for investors to go in and go out. And it's not like you go in and then you're married until the fund lifetime ends after 10 years or whatever. Yeah.
Wiebke, where do you see the challenges? What do we need to do in order to, so to say, bring the trees off the road, how we call it in German?
Sorry, I was actually saying with what Valerie said, I think to close the loop there's actually a scope to really build almost an additional industry segment. And actually, it's really so key to push innovation. And I listened into to Chancellor Kurz this morning and was struck that literally the first word he said in addressing this event was innovation. So I think bringing those two pieces together, in my view, it's very, very clear how this type of supportive access to funding then also helps promote innovation.
As innovation needs financing, as we saw today with Gero Kopitz, he said there would be no TTTech without private equity financing, especially in incubation phase, in the phase of product building. So you guys, I hope you guys can also convince the politics, obviously, to create the frameworks that you need so that you can invest and we can boost our capital markets, by that boost our innovation and, so to say, economic strengths in total. Thank you very much. I think the time is up. I hope you enjoyed this discussion. I think some very, very clear and very important messages of this panel. And I would have a look, I would just have a look whether we have another question. I can hear from our jury that we have a few minutes left. I was thinking that we're too late. Maybe Valerie, then let's continue if we may for a few minutes more. Any other challenges, any other message that you would like to deposit to the politics? What would speed up both the capital raise, but also the awareness on the side of the SMEs and scale-ups? Because I think that was an important point that you both made. How can we convince family-owned SMEs, which is 90% or 95% of Austrian economy, to open up to these ownership strategies, to let the private equity capital in order to grow faster?
Well, I would say by finding easy explanations that are transparent, by not overcomplicating vocabulary and throwing around fancy fancy investment banking language, but by explaining in precise and easy to understand concepts what the idea behind is, what the mechanics are, by actually having, I think like we do, a clear concept of what we want to sponsor. Yeah. And also by being clear what we are not doing. And this is normally actually a trust building exercise. If you can name clearly what is the focus of your investment strategy, then also the corporate and I think the entrepreneur can find himself quite well in a surrounding where his new partner, minority partner in that case, can also add value via providing advice on financing strategies for the future, provide advice and network facilities for the growth of the company. So I think if also this partnership behavior that we normally have in financing, if we start living this also on the equity side, that can be the changing factor.
Very good point. Wiebke, do you have any international best practice benchmarks? What do other countries do? What proved to be successful? Are there any regulatory incentives that can boost, so to say, this awareness of opening up for ownership?
You know, thanks for bringing this up. It's actually something I've been discussing with a few stakeholders also in Austria over the past few months, just to share experience. But I will say here, it's clearer on the, for example, legal and regulatory front, what's needed. And I think Valerie outlined it well. The other component, and that's when it gets harder, is when it requires a bit of a culture shift. And I think, you know, I'm originally from Germany. I think we have some similarities in that culture, that it's not the sort of typical open, open PE culture. But what we generally see works well is really having success examples, success story, and communicating around them. That sometimes it's real. If there's a personal story, and I think you already have a number of good personal or concrete examples also in Austria, how to really use them and communicate them. That this myth and this perhaps this fear that can be around giving up control is being put a bit more in perspective, and how much value, not only more money, but also a new partner with different experience, with a fresh perspective, can actually bring.
I love these messages. This is one of the core, so to say, assignments of media companies like ours, broadcasting. This is what we do every day, and we will continue to do so. Thank you both for these insights. It was very interesting topic for me to hear from you. And Wiebke, thank you for all these insights. And we have now the closing panel. Stay tuned. We're coming back in a second.